Right, here we go. Another week in paradise. So here we go. This is the S&P. That's basically what's going on. So I think a couple of weeks ago now, put out a video, called it S&P topping pattern. It was just around here, right? It was kind of done basically that, right? At the time, I looked at it on a weekly and went back to the old bollies and talked about this little bit here where it popped outside the Bollinger Bands on the week, which it doesn't do very often. When it does, it reverses. So it doesn't stay out very long. You know, you can see it all over here. Like it's quite extraordinary, want of a better term, to see it bust, the S&P bust outside its Bollinger Bands on a weekly basis. Bit of alliteration there. And that's what it did there. And I said, look, that to me looks like a topping pattern. I guess it hasn't topped, right? But it's certainly gone sideways. And when you look at it on a bit of a tighter time scale, you can start to see it here. Right? This little bit here. When you kind of start zooming in 4 hourly, that's what I like to trade off. You can start to see it. I had a little bit of a false break there. It's doing this. That is I guess the jury's out where that's a topping pattern. I'm skeptical actually of it being a topping pattern for the sole reason that this market is so ridiculously strong anyway. If there's economic bad news, it rallies. If there's economic good news, it rallies, right? But generally, these patterns break against the horizontal, right? That's generally what happens. If this was more like that, right, then it'd be more likely to break down. Just going on the way these things historically are, giving us a bit more like that. To me, it's kind of coiling, and it looks more likely that it's going to break up than down at the moment. Having said that, there was back here, remember a little topping pattern that I talked about here, which was this little flag here, if you might remember, you look back, and said that's going to break, and it did break down, right? I mean, not very far, but it did break down. It's since recovered. So that was the topping pattern. I remember I talked about where it was outside the Bollingers on the weekly basis. It did break down. It's recovered. Interestingly, it hasn't been able to break those highs. So it's still a little bit susceptible. Right? That's the S&P. Having said that, I mean, you know, the story of the whole last 20 years has been by the dips, right? So now is no different. So that's the S&P. Now currencies has been moving. The thing with the dollar index, right? Like it's been moving. You can see how it's broken above this level here quite strongly into a channel here. It's gone up to basically the floor here where it was before. So in some respects it's kind of done its dash for now, right? Where could it go to? Look, I don't really know where it could go to, but it has broken this trend, and you can argue that anywhere from that distance, that's where it could break up to, which takes up to like almost 100. That would be a respectable level for it to target on a technical basis. Or you could do it on the narrow and say, well, that's where it's broken from, and that's the top, and it's going just to there, right? So you can see with technical analysis, like it's a bit of a joke, right? When it comes to it, it's so goddamn subjective, right? Because this is the level that it's broken, right? That's the ding-dong double bottom, right? And so on that measure, you say, well, it should go there. Sure, right? But then you can also say, look, actually that's really the level where it went to. Wipe out the noise, and actually it should only go here. And it's basically already there, right? Such a joke, right? Who knows, right? Not me. Anyone who pretends to is absolutely full of SH12. The thing about this is the other reason why it's moved, of course, is if people are talking about the dollar index and they're not talking about the euro, they don't know what they're talking about, right? The dollar index has been story. I mean, you turn this upside down, right? You get the dollar index, right? That's what's been going on. So the dollar index has been going because the euro's been collapsing a little bit, which brings me to the Aussie. I've made some good money on the Aussie on this move. That's the channel that it's been going down in. This is the one where it recovered. I was shorting it here when it broke down, wrote it down, squared up, had a couple of jubs in and out there, shorted again here, ridden it down, and it looks like it could be finally breaking down. It's at a key level. If it breaks down, right, I mean, that would be first stop 71.18 on those Fibos, maybe a little bit lower, 70.24 on the wide. Right? That is the red line that I am targeting on my shorts. So unlike the other punters, the educational experts, I'll tell you what I've got on. This is my trading diary, really. By the way, don't do what I say. If you do, you got rocks in your head because you only hear half of the positions I got on anyway, and it's all in hindsight. But I think the Aussie is a short. That level, as I said, is like a really sound Fibo retracement, right? Like the old 38. It corresponds with a bit of resistance and support here. 70 cents, nice round number. From 80 down to 70, yeah, that seems pretty rational to me, and it coincides with this big trend here going down. So that's the equities, the currencies. Gold, the thing I love about gold, right, is the clowns who just believe in gold. When you look at it on a weekly, right, you know, there is a lot of talk about saying, look, there's this trend line that is, that it's broken, right? But these trend lines, you can draw them anywhere, right? When you look at it on a weekly, right, you take out this spike up here. This is a pretty sound line that it hasn't necessarily broken. So these downward trend lines, at the moment in gold, I'm still a bit skeptical about it. Someone commented on the video saying, when gold was going up or down, I said, look, could be either, right? Your bet's as good as mine, but we all are in the game of betting. And I said, look, down is my guess. Now it has gone down since then. That was based on a few things that were going on that didn't make sense, right? One of them was the moves in the yields, which I've marked here. This was a high in the yields, right? High in the yields, they started to drop. Gold rallied, ding dong, low in the yields. Gold topped out and started to come back down. This was a spike up in the yields that went down. This was another spike up in the yields. Gold went down. The yields I'm talking about, the 2 years, right? Same here, right? This was a record low in the 2-year yields, down at like 0.1%. This was when those yields started to move up, right? So a record low in the yields, high in the gold. Record low in the yields, high in the gold. Yields start to tick up, gold tanks for a long time. Yields start to tick up, gold moves down, legs down. You can see they're quiet. They're very impulsive moves down, and that's the other thing with gold, right? At the moment, you look at the price action, it's the sellers. They dominate, right? They own this market, right? The buyers fight, right? That's a fight, right? The sellers, as far as I'm concerned, they still own this market because that's where the smart money is. The people buying gold now because of inflation, right? They're the idiots. The people who are buying gold because of inflation were doing it back here, right? Because as rates started to come down, they said they're coming down, and that is going to cause what? It's going to cause inflation. Right? So they say, well, rates going down, it's going to cause inflation. We're going to buy gold. Let's get in, right? And of course, this is when the rates bottom, they say, and really the fears of inflation and the forward-looking thing of inflation, that's where it's priced in, right? And they go, right, it's going to happen. It's all priced in, and gold's been south ever since. I could be wrong, but frankly, I think I'm right, which brings us to the US, the 2 years. Let's look at the 2 years, see where they're going. Yeah, right. This is the chart I've got. You know, they are still like, it's ticking up, you know. Let's have a look on the daily. Let's see how it is there. Get rid of some of the noise here. Look, it's come back to that level there, and it's knocking on the door. As I said earlier, when I looked at the S&P, these things, they have a habit of breaking the horizontal. This looks like it's going to break the horizontal. This doesn't look like it's going back down, right? I mean, it's just not, right? I just can't see it. Where's it going to go to? It's going to fill this gap, right? And it's going to go up to 1.5%, 100 points. Best trade that I've got on at the moment that I'm confident in. It's not sexy. My broker said, mate, it's not sexy, but it's good. It is short US 2-year bonds. Just sit on it, hold it, roll it. That's what I'm doing. I don't recommend it. This is not financial advice. This is education. This is my trading diary. That to me just looks like a 300 points waiting to happen. And when it happens, it's going to happen quick, right? So that's the 2 years, that's the equity markets, that's the gold markets, currency markets, oil. Look at that, hey? Well, it's come off. It's come back to, you know, its nice little red line in the sand there. Look, could go a little bit further. I do remember a video I posted like a few weeks ago about all the ridiculous things going on in the market. Oil at record highs, copper at record highs, which has come off a bit, not totally, but you look at that, it is looking surprisingly like gold. That's looking like a toppy pattern, right? Then there was the Baltic Dry. I'm not sure if I can get the Baltic Dry Index. Baltic Dry Index. It's come off a lot. Look at that. Bingo. I remember when I posted the video, it was up there. So the Baltic Dry's come off. Copper has come off a fair bit. Oil has started to come off. These are a few things that are returning to normal in the economy, which to me also means the Fed has got some grounds for believing that inflation is not as bad, it's going to be not as bad as we think, all right? Baltic Dry and copper, I mean, they're big factors in just the price of goods in the economy. Two big bellwethers, I guess, the canaries, right? And they've both come off substantially. Oil as well. Oil not substantially, like 10%. I guess it's like 75 down from like 85. But those things are indicative that maybe the Fed isn't totally smoking crack in terms of saying inflation is transitory. I still believe inflation's there. Probably not as bad as the bulls on gold suspect that it's going to be. Look, so that's pretty much it. I mean, the long and the short of it is, you know, the equity risk is still, it's just bananas, right? It's just ridiculous, right? Still going up, overbought. There's not a lot of economic news out this week, and I think a lot of the results are out of the way. I think that this is gearing up for a pullback to here. And if we look at the Fibos on that, you know, look, I haven't drawn that before, right? that, right, to me, which is basically saying this move is 1.618 of that move. Dudes, there's a few planets aligning to say that, I say with a bit of hesitation, I think this week could be coming for a pullback to there. So based on a few things, based on that weekly that was outside of the Bollinger, still waiting to come back, based on this trend and that pattern there coming to a bit of exhaustion, that's the second thing. Third thing, this ratio looking like it's spent. Fourth thing, on the 4-hourly, look at this divergence. You know, mate, that's almost the, let me change the colours, that's almost the nail in the coffin for calling like a short-term top. I mean, I do laugh, right, because shorting the S&P is a slightly suicidal trade, right? I do it. Sometimes it's worked, sometimes it hasn't, right? I've had better luck shorting the Aussie share market, and that's where it is, right? Anyway, so the roundup, S&P 500, not a good place to get long. I'm watching a break of this trend line with a target there. That's the S&P. Gold, look, I still think it's come back to 1830, and really I don't think it's a buy at the moment. I think as US yields go up, that could spell a bit of a disaster for it. Watching the dollar index, I'm still short the Aussie dollar. You know, there we go. It's coming down there. It's going to test out critical level for it to break that one, but you can see how it has been unfolding lower. It's been coming back to all these, just testing these little levels there. Tested them there, tested that one there, tested this one back to there, tested this one back to there, even tested this one to there, right? So it's been stepping down. Doesn't look like it's over yet. Having said that, I'm a bit wary because it has got a bit of the negative divergence on the 4-hourly, which is one of the indicators for me. Been strengthening there despite going lower. So I'm still a bit wary this could hold. If it breaks though, it's going down to like 70 cents, something like that. The last thing I'm going to talk about is the VIX. I always laugh when YouTubers talk about the VIX, right? Because let's face it, none of them, right? None of them have run a complex or reasonable sized or industrial option book in their lives, right? So they don't know, right, how option traders work and think. Right? I was an options trader for years, right? Trade all kinds of options, interest rate options, equity options, commodity options, currency options. Anyway, and the one thing about options traders, right, on the street, right, to work for banks, right, that retail punters don't get, right? You guys, retail punters, trade the direction, right? You buy calls because you think it's going up. You buy puts because you think it's going down, right? You rarely sell vol unless it's a covered call, right? That's it, right? Traders and for banks, for investment banks on the street, they don't trade direction. They sort of do, but primarily they trade the vol level. What is the VIX? The VIX is a measure of the implied volatility of options that are being traded, right? So it's a backward-looking thing, right? It's not a forward-looking thing. It is an index of the price of options that are being sold and typically sold by the street, right? And when I say typically sold is professional options traders who work for banks, they are generally always short vol, right? Their job is to sell vol, right? And that's why vol, it always kind of trends down, right? It just goes down, right? Because they're always selling vol so you can earn theta. If you don't know what earning theta is, you shouldn't be looking at the VIX, right? You sell vol to earn theta. And what happens, right, is all these options, right? I used to trade these overnight options, right? They're overnight index options on the 3-year and 10-year Aussie government bonds, right? And you'd trade them 5 points out. You'd trade them at 5 o'clock in the afternoon when the day session closed. You'd sell them for a point, and they'd be exercised at 9 o'clock the next morning on the open, right? So they're short-dated overnight options, almost like digital style risk, right? Fun to trade, made a lot of money. But this is exactly what happened, right? You'd sell them, right? And people would sell them for 5 points out, 4 points out, 3 points out, right? Maybe 10 for the strangle, then 8 for the strangle, 7 for the strangle, 6 for the strangle, and then an event would happen, and everyone would get burnt, right? And all of a sudden the prices would blow out. You'd be paying like, you'd be a 12-point spread on the strangle, right? Then everyone kind of recovers it, kind of sell them. Then something happens and it blows out. This is what happens, right? This is not a leading indicator. All this is saying is that there was an event where volatility came up and the option traders repriced their risk, right? We had to buy back positions. I mean, rarely, they just got burnt on the gamma. And then they got back into the groove and they sold it back down again, right? Because they see these vol levels and they go, mate, I'm going to earn good money off the theta off this. Let's go again. So that's what they do, right? So anyone that's talking about the VIX, right? If they're not talking about the theta that option traders earn and the way in which professional option traders want to be short vol, they don't know what they're talking about. This is not a leading indicator. And these guys that use the VIX to talk about upcoming moves in the market, they're idiots. They're absolutely full of SH1T. Look, I think that's it for my rant today. As I said, I'm my positions that I've got on. I'm short the 10s, 3s, and 2-year government bonds. That's the best trade I've had all year, in the futures. 100 points or something like in the Aussie one. This is still looking pretty susceptible to me to a break up, right? So I'm short that. Still short the currency. Got a bit of a stop here, right? Around about 73.50. No, sorry, more like about 72.80 actually. If it gets to 73, I'm out. 73.40, I'll be out by then. Still short the Australian equity risk. It's a bit oversold compared to the US market, but our market is quite different. Doesn't have the tech, and it's got banks and mining. Miners have been lagging the iron ore drop, and I think that's really about it. All right, have a good one. I think the main thing to watch this week is how this little pattern, you can see it up here, how is it going to unfold? This is the fake market, the cash market. See all the gaps. There's one guy who talks about the futures, keeps calling it the fake market. He must be watching my videos because I've noticed he's stopped calling the futures the fake market. What a freaking idiot. Futures is the real market. It runs 24 hours a day. Well, they call it 23 with a couple of breaks just for settlements. This is the thing to watch at the moment for equity risk. That will be interesting. The moves in the yen, the euro, the sterling, and the dollar index, that will be interesting. That might feed into here. And the big sleeper is those 2-year yields and the damage that it could do to all markets. All right, that's it. Have a good one. Ciao.